Welcome to the High Signal podcast. I'm your co-host Sean from Derive, head of research, and I'm here today with my lovely co-host Ian from London, also a core contributor at Derive. As a way of introduction, I'm head of research, so I do a lot of financial engineering and quant work and mechanism work, and that's been my bread and butter here at Derive for the last 4 years. I come from a maths and stats background, so I like to look at things from the numbers perspective and really delve into like interesting problems. Ian, how about yourself?
Thanks, Sean. And I am the less well-educated, less number-focused member of the hosting team. And we thought it would be a good balance, right? Because Sean gives amazing insights into kind of the numbers side of things, and I maybe ask some of the questions that you guys would ask in the amongst the viewers. So I'm Ian. I'm over in the UK. If you didn't pick that up from my accent, I actually was a consultant for most of my career, and then transitioned into crypto a couple of years back. And I think I'm kind of a couple of proof points. One, sometimes your inner anxiety tells you might be too old for crypto. I don't think that's true, and hopefully I'm a proof point for that. And two, um, I think that if you haven't really got like a background in crypto, you haven't worked within a protocol, you might worry you wouldn't be given the opportunity to work within them. So hopefully I'm a proof point against that too. So yeah, it's going to be fun to kind of work through macro trading, crypto, AI, the topics that we'll go across, and we look forward to your feedback as we go, and we can shape what you might want us to talk about.
Yeah, very free flowing here. We can talk about anything. Typically, our focus will be on markets and crypto, but as Ian said, macro, AI, all sorts of interesting things that crop up. Very happy to talk about and love your guys' feedback on that. Cool. So with that, I think we can go over what's going on in the markets today. And simply put, what a mess. It's been quite the bloodbath today. I can quickly share my screens. It's been a particularly unpleasant sort of day. 1 second. I can share uh, this. Cool. Um, well, across the board, things haven't been too great. I think ETH had a huge wick down, hitting about 41.50 at a certain point. Bitcoin and Solana not faring too much better. I can say personally from my trading, it's not been the funnest of days. I was giga long and I'm starting to regret that. Ian, did you have anything to add to that?
Just to say, some people might just listen in and might not be able to see, so we'll kind of give you a quick overview of the charts we're looking at. But this is a CoinShares list, and I think you guys probably already picked up or already know it's a sea of red. But I think it is. I think it is the pullback we actually were waiting for. I don't personally feel that it's a huge change in direction, or the top of the cycle, or all the things we're all talking about right now. So I'm also long, but I was expecting some kind of pause before the last leg.
Yeah, I want to get more into the like, is this the top or a simple local top later on? I think a lot of people are quite early to call this as the top, and I think we still have a lot more gas in the tank for that. I think in the next little one here, if oh no, I need to share the tab. We sort of have liquidations over the last 24 hours, so it's been a really sort of bloody day for longs. A lot of liquidated ETH and BTC positions. But as a number of people, I think Crypto Condom has been noting, there's been a huge buildup in open interest for alts lately. We definitely have been sort of reaching peak alt cycle. And you can see that for others here, like that is a anomalously large chunk associated with that. So I think we're really seeing an unwinding of the leverage in the system, particularly from alts, but definitely in the majors as well. How about you, Ian?
Just to build on that, yeah, Sean. I think that when you come into crypto, you become aware of this. Of the cycles, right? Of the cycles that are going to come, and the OGs who've been through a number of. So I think I've been through kind of two, three, but many have been through all of them. And they'll talk to you about kind of BTC. We'll get the flows first, and then they'll see a rotation into ETH, and then we'll see kind of the long tail alts pick up and get some attention. I don't think that's going to happen in the way that it's almost like too simple and too easy. And if it was that easy, we'd all be billionaires and just trading this expected move. So I think when you say like alts have had a good run, for sure they have, but I think it's important that anyone who doesn't have a lot of experience in this sector doesn't wait for the everything up mode, because it may never come. So some alts, and if you've been really keeping yourself close to the markets, you'll kind of ride the wave. But I think something we're going to talk about a little bit is just, for example, the recent hottest piece is the perp dexes, and arguably before that, Hyperliquid has been a great play. But my general point is just, if you're waiting for everything up and you're sat in some long tail alt, it may never get its moment in the sun. So just be aware of that and just kind of position accordingly with narratives and flows.
Yeah, I think as well, like most people have been calling for the last few weeks a bit of pain towards the end of September. September is historically the worst performing month for crypto across the board, especially for the majors. At least the running theory I understand is like yeah, September is the end of the financial year for the US folks out there. And so if you're sitting on a number of gains and you have to report that to the tax man, then that sort of naturally infuses a lot of sort of forced selling towards the end of the month. You also have people coming back from, August vacations, sort of unwinding positions as well, and that adds more to the selling pressure. So you know, I don't think anyone's super surprised by, a minor correction, moderate correction maybe, but I think you know, this just comes with the territory, right? Like this crypto is not exactly known to be a stable industry. So um some longs being burnt out is definitely not the first time this has happened, and certainly not the last time.
Yeah, and, I,
Cool.
and remember, if you
Oh,
don't
yeah.
have a pullback in September, then you can't have October. So, it's never. But and it makes it sound like, again, like overly simplistic, but people really think it's going to just keep going up. People believe their own hype, and they get into a trade, particularly on leverage, and they see that green candle come and they think, okay, great, I was right. I'm going to keep being right. And I think it's important to always think the most successful chart you ever want to see should be, should look like kind of steps up and to the right. So if you don't have a pullback, you won't get your next green candle. So I kind of like this refresh in the market.
I think in the interest of time, I have a lot more to say on that, but we can talk more about that in one of the next pieces. But the next thing I wanted to share was this sort of liquidations heat map, which I was tracking throughout the day as I saw ETH drop further and further. But basically, what you can see here for the people listening on audio only is sort of the clusters of prices at which liquidations would take place. And maybe if I make the scale a bit more obvious, throughout the day, we pretty much burnt through um, a number of liquidation thresholds. And so what would basically happen is as price falls, people get liquidated. So they'd have to sell their longs and unwind those positions. And then that consequently puts more downward pressure on the price, which then leads to more liquidations. And the cyclical nature, you can see quite visually with this plot here. And you know, it's not been great if you've been holding along today. And but what that shows us now is that there isn't a huge buildup of potential liquidations on the way down. So I think we'd probably stabilize here. Maybe we retest 4,000 in the next couple of days. Maybe we break through into like the high threes, but I really think that that's probably it for the immediate downturn. And I think there'll be some consolidation here. And we can talk a bit more about the options markets later, but I think it's sort of a pause in the bleeding, so to speak, is what we're seeing now. But Ian, what do you think?
Marginally more pessimistic, but not much. I think we kind of bottom out at 3.9, maybe kind of 3.6. It's ETH we're referring to here, if we didn't say that. Um, I think that, it's a DAT driven market right now. That's where the flows are coming from. And I think there's kind of a lot of inherent leverage within these positions. And I think that might over exaggerate some of these kind of smaller, very healthy moves. So I don't think it's unhealthy. And I'm not, again, doesn't make me kind of uber bearish, but I do think I think we have a little respite for now, and then we probably test a little lower.
I think one thing we could talk about on a potential future episode would be sort of like what are the forward indicators for like these DATs, right? Like the DATs have really sort of become a tour de force, especially for ETH, but obviously Bitcoin has its MicroStrategy. Solana is going to start having its own versions, I believe. Salami has his own Solana DAT now. I think the way that these DATs operate is that they issue convertible debt. Basically, they take on money from outside investors and give them these things called convertible notes. And these convertible notes are like options. So instead of receiving an interest for lending to these debts, you receive call options. So you basically get levered upside to Bitcoin, ETH, take your pick. Now, like the theory goes is that, and we can get into this later, but as like the volatility for these companies drops, the value of the interest or the value of those calls diminishes, and that greatly reduces the ability for those guys, those DATs, to um, to lever up, so to speak, and that slows the acquisition of these crypto tokens, and so that obviously has this negative feedback loop, and so we could see an unwinding of those positions there. Not only that, but if you look at the number everyone likes to talk about is this MNAV, so how much over the NAV are these DATs trading? I think that I think I wrote an article about this a while back, but the MNAV for a lot of these DATs has been steadily decreasing over the last couple of months. And so the worry would be if that MNAV goes below one, that's when you start seeing some interesting arbitrages appearing in that it becomes advantageous for those DATs to sell the crypto they hold to buy back their own stock. Now that obviously then makes the price go down. So a lot of interesting things we can have coming up with DATs. I'm not going to FUD it too much right now. I think that it still has its role to play, but I think maybe um, 6 months from now we might have to revisit like, um, is there a threat there? Like, is there an existential risk, or could that be something that potentially jeopardizes the bull cycle, or sends prices back crashing somewhat? I don't know, Ian. What do you think?
Yeah. Yeah. I think that's exactly the right overview, and I'll resist the temptation to go too deep because I do think it's probably a whole segment, or at least, or maybe even an episode worth. But to me, there are echoes of the ETFs when they first popped up, and it was kind of another format, and some of the ETFs were 1x, 2x, 3x that we're used to in TradFi, and then how will the market? It's almost like first of all, there's like the not your keys, not your crypto, and then there's the flows examination and the leverage examination and the redemption and how that works. So it just adds layers of complexity that I think we should unpack when we have more time. But yeah, I'm really aligned with your summary.
Cool. I want to get through these quickly, but the other thing I saw today, this is from Coin Analyze, is sort of this sharp wick of liquidations for today. So definitely one of the bloodier days in liquidations over the last month, but also if you extend this out over the last 3 months, really. I think today has also had like the most long liquidations over the last year. So, all's to say that like, if you were short today, congratulations. I think, dinners will be on you. One thing that has been seeing some traction on Twitter, or at least my feed, is sort of the dominance of alts over the last month or two. So if I take this back by to 3 months, and if it loads, um, we definitely see like ETH and Bitcoin's open interest in their volumes um, be sort of lower than they have been typically. What that means, obviously, is that non-majors have been seeing an increased trading volume, but also open interest in perps. Now, people saying that that's like an indicator that we're in alt season, and like I think I saw as well on Twitter that like the altcoin cycle indicator topped at 100 and has now fallen back. I think it's quite interesting to see it. I know later on in the episode we'll talk about these perp dexes, and those have received an insane amount of attention, especially over the weekend. But yeah, I don't know. I thought it was interesting to see sort of um, just how much. And to me, it was a surprise, honestly, to see how much like alt perps, how much they dominated the open interest and the volumes. So that was curious to see, and I probably guessed that the recent bleed out, we'd see that drop a little bit in the coming weeks. But I don't know. What do you think, Ian?
Yeah, yeah. I think a few things. Again, I'm resisting the temptation to over unpack because again, I think there's a huge topic underneath this, which is for like sophisticated flows and for the uninitiated or the first timers, um, how you get your leverage, how you get your exposure seems simple, and I think people are kind of funneled into perp dexes, or even kind of perp sexes, but it's all about kind of you get your leverage here. Here's a slider between whatever, right, 1 and 100, and I think that's where these huge liquidations come from. I think that people are not truly aware of the fact that at 100x or 1% move is quite a big problem. So I think there's actually a responsibility for crypto to be a little bit more educational around the way that particularly crypto Twitter represents some of these exposures and opportunities. And we haven't said tons about our key sponsor and our employer, which is Derive, but Derive is obviously an options deck. I'm not gonna do some huge shill, but I do genuinely personally believe that the inherent leverage inside options is a much smarter way to gain that kind of leveraged exposure, not least because these huge red candles that happen, I've traded perps myself extensively, and you get those wicks, right? You get the wicks on your exchange that takes you out, that flies through your stop loss. And even if it isn't, liquidation, it still takes you out of a position that you would have had exposure to if you could um, navigate or stay stable and consistent through that short-term volatility. Yeah, but again, great content for another episode.
I would say that like I had a fun time this weekend, sort of trading through perps. Didn't have as fun of a time today, but yeah, like I think we can talk about this maybe on another episode. But yeah, just perps have just such an accessible instrument and extremely fun. But yes, obviously they have their downsides, like when you get scam whipped down and liquidated. So yeah, topic for another day. But yeah, definitely very interesting on that. Moving on. Arthur Hayes has been in the news a little bit. He got a little bit of flack today for selling a couple mil worth of his hyperliquid position, but he put out this interesting tweet about 10-year treasuries and what it could possibly mean for crypto. So I don't know, Ian, did you want to explain at least what you think about this?
Yeah, and I think some of this is you and I finding our identity for this podcast because there's a whole macro episode here in just exploring, fiscal dominance and yield curve control and the third mandate of the Fed, which I think was Arthur Hayes's obsession for the last week before he kind of turned to this piece. But effectively, it's about trying to kind of understand: is this too much treasury issuance and not enough demand? Or is it, and I'm talking like wider macro conditions here and liquidity conditions, or is it actually, and this is kind of my theory, that the market is expecting more cuts? The market's expecting 2 to 3 more cuts. So stop me if I go too far down this rabbit hole, but the most recent member of the FOMC is a huge Trump supporter, and there's a huge political angle to all of this, saying Trump is, and this is certainly not that controversial, I don't think. Trump's very keen to cut rates and to prompt perhaps the capital and business cycle that would make him look fantastically successful in his tenure, in his second tenure as president. Whereas I think Powell's been a little bit more. I think he gets a really hard time, honestly. I don't think he's done a horrific job, and I don't think it's as simple as kind of saying you're cutting too late. But like in terms of crypto, rising yields tighten with financial conditions, and this kind of tug of war between, are we going to see further cuts and further liquidity, which will almost, crypto's so small in that environment and just will have to be the next leg up, or are we going to see some kind of political standoff where perhaps if the next cut doesn't come, that really could prompt a turnaround because of the level of expectation. The last thing I'd say on this is just one really important concept to understand. In my experience, something I found really interesting is the idea of what the market's pricing in. And when you're considering crypto through a macro lens, it's really important to think about what's been priced in and what the market has already reacted to, versus you thinking, oh, great, I think this is going to happen, so I'll wait and benefit from this happening, when in fact, sophisticated flows have already reacted to that and positioned accordingly.
I think I mean I agree with a lot of that. I think from memory, I think Polymarket is pricing in 50% chance of three rate cuts. I think it's about 75
Yeah.
bips for the rest of the year, including the one that we just saw last week. I think maybe this begs like a more like general question from me of like, we talked earlier in the episode about like, is this a local top or is this the top? The reason I think that this is simply a local top is like the Trump administration is very well invested in crypto right now. And I think, as you said, like Trump wants to win the midterms. The Republicans aren't exactly polling super well. Lower rates means a more exciting economy. It means a hotter economy. It means more people with jobs, people taking out loans, people not having to spend as much, paying off their home loans and they can go take holidays or invest in a business or buy crypto. And like that's all really good if you're trying to appeal to your like centrist or middle of the range voter. So I
Mhm.
think it's very obvious Trump is going to try and continue to put rates down now. Like Jay Powell might put up some resistance to it. Um, but obviously, Trump is trying to maneuver to replace Powell. I think his tenure ends in May next year, or perhaps even
Yeah.
earlier. And he's obviously trying to fire Lisa Cook. And so um, he's going to try and stack the Fed board with as many loyalists as he can in order to like drop these rates. So like that's like one reason why I think, um, the US has a number of other issues going on right now, obviously, but in particular, like lower rates generally means better things for crypto. So that's like one big thing. And I think like the other thing I'll just say on this, and like we're not a political podcast here, but definitely there's like there is a dimension to it when we're analyzing these prices is like one of the biggest barriers to institutional adoption and just general money coming into the space has been regulatory clarity for the last 4 years. I know when I've been talking to traders and talking to investors and people from funds, like every person is like, I'd love to get into crypto, but I can't because of regulation or regulatory clarity. And what we've seen with the Trump administration lately is like um, very bullish signs from that. In terms of like, Gary Gensler obviously was replaced. I think you have a lot of Trump loyalists in. I think Bo Hines was a former like I think advisor at the White House. He's now like running a section of Tether. I think as well, like you have the elephant in a room of World Liberty Financial, which is run by the Trump family, co-founded by them as well. Like this is an administration that is heavily embedded with crypto, stands to gain personally from crypto. So if you're making a trade on this, like what's the trade? Well, it's do you think that an administration that is personally invested in the industry will seek to like enact legislation or sort of um, uh, you know, clear up legislation or clear up regulation in order to improve that industry? And I think like the answer would be yes. So I think that's one dimension to consider as to why like 2026, we're in 2025 now, why 2026 will be like a very interesting year when you start seeing the effect of these rates cuts and you start seeing more support and the barrier of regulatory clarity start to evaporate. And I think that's why I'm bullish into 2026 at least.
Yeah, great summary, and I think also you touched on a few things there. One of them is, and certainly we've experienced this as part of our roles with Drive, but the kind of the mix of where the demand comes from, of like who is buying crypto, who's holding crypto right now, has become, I mean, completely transformed, even from kind of 2021 when I got involved in the space. Still, there wasn't really institutional demand at all, at least that you could see. And I think whether it's via ETFs or whether it's via DATs or whether it's via strategy, or Tom Lee more recently, I think there's a ton of these new kind of bag holders where it's like, great, we'll kind of offboard to those, but then playing into that is the fact that these guys are super sophisticated buyers, and it's not kind of as simple as, oh great, we bought at the right time and I will offload to these guys. So I think the reason that comes to mind of like the sophistication profile of the buyer is some of the things that are happening are just bigger than crypto. This is not a crypto thing. This is like you're talking wider politics, you're talking wider liquidity conditions and wider macro conditions. And given crypto's, tiny single digit percentages, if that, of kind of global flows and global capital, it just gets carried along like a little boat with the wave. So I think if the Fed start, if they do cut, and we've said there's no guarantees there about what happens between now and the end of the year, but if they do cut twice or three times, I think everything goes up. Not just crypto goes up. I think it's like, TradFi sneezes and catches a cold, and crypto catches pneumonia. I think we're just a caricature of that market. So if money becomes that easy and liquidity becomes that abundant, then all of the kind of sub analysis is almost irrelevant, because everything that will feel like the everything up moment.
I think as well, like, people always like to point out that, like, the stock market's at all-time highs. You have, what is it, Apple at like a $4 trillion, oh, sorry, Nvidia at like $4 trillion. You have the AI boom, everything is up only. The Magnificent Seven and the S&P 500 are just like literally parabolic growth and up and to the right. Um, like the question is like, are these things starting to become too big to fail? And I think maybe the point I'm trying to get across here is like you have an administration that is very embedded with like the tech sector, right? Like if the tech sector were to crumble tomorrow, um it would sort of be catastrophic for the US economy. The S&P would be ruined. You would have people's retirements evaporate almost overnight. Not to be hyperbolic in that, but it would be bad. I think at this point, like, maybe it's worth considering that, like, if this is too big to fail, like, the government will surely enact some kind of policies in order to prop up these companies, to prop up these industries. And I think maybe the point I'm getting across with like the administration's ties to crypto is like I think that crypto will probably be tied into that basket as well because of the personal connections to a number of key people in the administration. Peter Thiel, I think, has invested heavily in SBET, Sharpbet, Howard Lutnick, and Steve Witkoff. They all have connections as well to World Liberty Financial. Yeah, the Trump family, obviously. Like it's very clearly connected there, and so I think that that bodes well for the industry, especially since these are the people who obviously can enforce and affect a lot of change at the very top. Um, Maybe coming like from an example from my home country in Australia, we have like what some might consider like a Ponzi housing market. Prices have just been going up and to the right constantly for the last like 20 something years. And every single successive government has been willing to not only implement but also maintain from both left and right policies that benefit homeowners because that's sort of like a great source of wealth. China also did that as well, obviously, maybe not going so hot there for their property sector. But at a certain point, like governments realize that, okay, like these are things that people have an immense amount of wealth in. It's in our political interests to ensure that those bags keep going up and up and up. So we'll enact policies that ensure that. And those are obviously beneficial and supported by the population and that's what keeps going. Now that's not a comment on the sustainability of these things, but it's an observation to say that like we could be seeing something similar happen with the tech sector, which, as you said before, is highly correlated with what happens in crypto. So these are
Just to build
very
on
much
that
entangled
last point.
industries.
Yeah, totally, and just want to build on that point about kind of even if you say there's a few things there, right? There's the concentration of the Mag Seven, but there's also like the dependency on equities doing really well, or the interdependency based on the wider macro conditions. But one really simple flywheel that I think people may overlook or may not be kind of frontal lobe aware of is that because we have these pension systems or 401ks in the US, pensions in the UK. What's the US term for that, Sean, for a pension? Is
Roth
that
IRAs, I think.
superannuation?
Oh, you mean
Oh,
the
no,
Australian
Roth
one? Yeah,
IRAs.
superannuation. Yeah.
Superannuation. Yeah. So we all have these names for these things, right? And it's money that we put away so we can retire someday. But if you look at the US market specifically, and by the way, every country is investing in the US market. That's just not just the market for us, it's the market for everyone. then those pension funds with all that capital, they invest, they have to be very responsible. It's some of the slowest moving capital, if not the slowest moving capital in the world. And they invest, they have to invest in those equities. They have to concentrate in those Mag 7. So, the biggest investor in the world is the Norwegian National Pension Scheme, which is just like abundantly rich because of the natural resources they have. And what do they hold? Mag 7, Mag 7 right down the list. And I think what's interesting about that is that means, again, back to my point of like liquidity and macro, when conditions are favorable for capital and for investment, there's an automatic flywheel for because pensions are going to be the demand. Where does that capital go? Well, that goes to retirees. We have an aging population who are then coming into that cash. So, and if you, and again, not making this overly macrocentric, but if you look at kind of the inflationary nature of capital and fiscal dominance, and I don't know if you've read much or followed much by Lynn Alden, but Lynn Alden has stuck by this phrase, nothing stops this train. And her book, Broken Money, is fantastic, by the way. And I think it's really true. You just keep printing the dollars and then they're bought by the pension schemes, which means the equity prices keep going up. And, you need a pretty big fall down for all of that to collapse. But when it does, I think it does really dramatically. So yeah, I'll pause, but it's just an interesting kind of flywheel effect.
By the line, no crying in the casino. But yeah, no, I think Lynn has some interesting takes, so we can talk about that later as well. Okay, I guess on to the main topic now of today's episode. Well, if you have been following on Twitter over the last 48 hours, there's been a huge interest in hyperliquid clones or alternative perp dexes. And so I thought it would be interesting to talk about that now. Basically, from my understanding, there's this new thesis that's arisen of, Hyperliquid has had an immense amount of success over the last couple of months, and everyone's trying to replicate that now. So, from the competitor side, if you can take 10 to 20% of Hyperliquid's flow, that's already a huge success, right? Like you are one of the biggest perp dexes in the business, and so that creates this huge incentive to launch, a Hyperliquid competitor. On the other hand, you have people like Binance, right? Like, and Binance is seeing its perp share being gradually eaten away. I think Hyperliquid is about 8 to 15% of Binance's perp volume over the last month. And then when you have competitors like Lighter and Avantis sort of all springing up, and Asta, that unassailable lead that Binance has had up until now starts to be looking a little bit more mortal, so to speak. Um, and then you also had, and I can share my screen here, um, this one here. We also had a few weeks ago, sorry, what is it? Just under a week ago, we had HIP4 by John Wang and a few others talking about adding betting markets essentially to Hyperliquid. And really this comes down to what is like the ultimate thesis of Hyperliquid, which is being this like centralized, or sorry, this aggregate of all liquidity on chain, not only for perps and dexes and spot and eventually I'm guessing options and other derivatives, but things like betting markets, which are seeing like a huge amount of interest in them lately because there are arbitrages galore in that space. So um, maybe for the uninitiated, we can talk about sort of what is it? What's been going on with like the the perp dexes here. So broadly, we had Asta launch, and that sort of did a 300% rise from 50 cents to about $2 at its peak. We had Avantis launch as well, and I think that also had a similar run up, maybe like 150%. And broadly, like people have been farming this thing all weekend. I tried trading it on Lighter. Unfortunately, that didn't go down so well. Um, so yeah, I think I just wanted to run through a few things, and Ian, call me out when you have uh, anything interesting. Um, basically, I first thing here would be that Lighter briefly surpassed Hyperliquid in terms of 24-hour volume, which was a very interesting sort of phenomena. Now, obviously, a lot of people have been attributing this to points farming. I could say for myself personally, guilty as charged. Um, but if you look down here as well, we have Aster as well. So maybe the point I'm trying to get across here is that like it's definitely been quite exciting over the weekend. Um, damn, I'm not haven't rehearsed this as well, so I'm not as good on the line. But I don't know, Ian. What are you thinking so far?
No, I mean, where I would start with my analysis of this is almost like what did what were the elements that made Hyperliquid so successful in the first place? Because I think the airdrop was a huge one for sure, but I think the model itself, because you know you're talking about an absolute titan in Binance, and we touched on it at the very beginning, talking about like it's the most accessible leverage. It's the kind of the easiest place to get leveraged exposure. Um, but then as Gary Gensler's regime tightened everything and it was kind of scary to be involved, I think Hyperliquid found the perfect storm within which to kind of not only have the airdrop but also have a new model with HLP and this kind of decentralized, open to anyone, almost like crypto purist setup and model. So I wonder whether and you probably have looked into this a little bit more than me so far. It's been quite kind of rapid in its growth. But are the others literally doing what you said, and they're saying, you know, let's just try and let's do Me Too and try and get 10% and do a similar offering? Or when you've played around with Light or Avantis, have you seen any kind of edge or any competitive advantage that they've tried to bring into the market?
Yeah, like I think well, lighter in particular is the one that I've had the most experience with, and its sort of unique gimmick has been the we don't have trading fees, which for someone who's flicking in and out of positions is like a particularly appealing setup, right? Like paying a couple of bucks here and there doesn't sound too bad on like a several $1,000 position or higher. But then, like when you do that a couple of times, especially on low liquid coins, like if you're trading, I don't know, Pith or something like that, um, it really starts to add up. And I think that's its main claim to fame so far. I think sort of you can edit this out, but like I'm sort of just sort of this can sort of morph into the real thing now. But the thing that people have been really talking about is like, what is the price of these points, these lighter points? And people have been stacking these things for months now. I think it started in April. Um, but really, like, what's been interesting about it is like people are pricing these points like astronomically high at like $30 to $50 a point. Um, and given that people are farming like thousands of these points, especially if they got in early, like this is sizing up to be like a hyperliquid number two airdrop. And I think that's been quite interesting, right? Like people, like, to your point
Whose
earlier,
money
like
is it, Sean? Is it VC money behind it, or you know, Hyperliquid? Again, I'm thinking of like the other cornerstone was they didn't accept outside capital as they grew it, and that was seen as a huge plus point, I guess. Who's going to be paying out on these points, right? Like if you don't know where they're coming from, and they're farming you somehow.
I'm sure to an extent they are farming you, right? Like that is sort of the point. No pun intended. I think what really the value comes from is like everyone has this huge expectation now after like what happened with Hyperliquid. People made, if you traded, a couple $100 worth of fees on Hyperliquid, you probably made at least a high six-figure airdrop. And if you had the balls to hold that to, its peak at like 58, $59 earlier this weekend, like you'd probably be sitting on like a comfortable seven-figure payout, which is insane. Um, and I think that's really whetted the appetite for a lot of these perps traders and people who like miss the hyperliquid boat. Like I'll freely admit I missed that. And I am very, very much kicking myself every day that I didn't, you know, put a few trades on hyperliquid at the very start. And I don't know, maybe this is people, to your point earlier, thinking the line always goes up and thinks that the next one lighter will, you know, um, get you like a good payout, as did Hyperliquid, people rotating from Hyperliquid into the next big thing. I think it's like Hyperliquid is. like technically it's great, right? Like I'm not an engineer, so I could be speaking out of my depth here, but the thing they really nail well is like the liquidity. Speaking as someone who's traded options on a less liquid book, right? Like it's not fun. When you open a trade and you're immediately down because the book is super wide, it's a terrible experience. And the really nice thing about Hyperliquid is like the spreads are super thin. The book is super deep. So if you want to enter a position and you want to enter it in size, like you will get that fill, and that feels like really, really nice. In addition to the like the low fees, but there's nothing unique to that, right? Like liquidity begets liquidity, and if people think a new venue is going to be more liquid, the liquidity will flow there. So I think that this is people sort of one rotating from Hyperliquid into the next big thing, um, and two like maybe we're seeing a diversification in terms of like one monolithic perp DEX, previously Hyperliquid, into several competitors. So I think Lighter is probably like the case example of that. But we can talk as well about Aster, which is probably the thing a lot of people have made considerable amounts of money on over the weekend. So let me pull up its price chart here. But for those at home, um, Asta launched its token on Friday, I think. So it started at about 56 cents and then pretty much rocketed up one way to just shy of $2 yesterday on Sunday, at least in my time zone. Now, like with the recent downturn today, it's not done as hot, but still sitting around like 155. So if you bought this token on Friday and you held it to today, congratulations, you just tripled your money. Not a bad return for 3 days. Annualized, that is some ungodly percentage. Um, so what happened? Like, why? What is this Aster thing? Basically, it is like another lighter slash hype competitor. Um, but what a lot of people don't know is that it was previously, I mean, it's been around for ages. The token is new, but it is simply a rebrand of Apex Finance, so APX, if I'm pronouncing that correctly. And then they merged with Aster, I think, the other day, and then the token got launched. So really, this has been a product that's been around for a while. As you can see from the Twitter page here, it's been around since August 2021. So what's the hype about all this? It's like, cool, another perp dex. There's 200 of those already. Um, the interesting thing was that it got a shout out from our favorite Binance CZ. And this is where sort of the tinfoil hats, but probably people with like some legitimate, interests in this have come out and said like, well, this is sort of like the Binance version of Hyperliquid. CZ is sort of angry, annoyed, fearful of a rising Hyperliquid and LiDAR and all these other competitor dexes. So they want to get out ahead of it and build their own version. And there's some connection between CZ's like family office investment firm, I think it's called YZI, and LiDAR. I'm not too familiar with the details, but it appears that there is a connection there. And people sort of saw this tweet. And as you could see, it happened on the 18th. And the trade that people made was like, well, here's this new token for a perp dex that is receiving some support from CZ, and people bought it, and it's had a pretty good effect on the token price, and that's really the trade of the week that we saw with Asta. So yeah, that's pretty much it. I haven't actually personally used Asta. I did try to buy its token, but unfortunately was unable to. As a perp. Um, but people are basically saying that this is the Binance Hyperliquid. So yeah, something interesting to be said
I
there.
think just to
One one last
go
thing
ahead, go ahead.
before I before I let you get onto it. There are some people saying that Aster is heavily centralized. And there was this tweet here that I saw. Um, the top 10 whales have, been shuffling money around, looking to profit off of this. Of course they will. I've seen some other tweets. I think like the top five holders own like some obscene percentage of the total supply. even up to like 90%, but don't quote me on that. I'd have to pull the tweet up for it. Um, all of this to me smells like there is like this is some sort of insider play with the Binance guys. And it could be interesting to see where this goes. And yeah, like that's sort of like the first of the perp dexes to really hit it off this weekend. So yeah, what do you think?
Yeah, I'm gonna dull down some of this hype around this space with just a word of caution, really, which is and it completely depends on who you are in listening to this and watching this. Because if you're a sophisticated investor, then none of this really applies to you, right? Or you know all this already. But if you're not, there's a danger that this looks too easy. I think you look at these charts and these are whatever the vehicle. Whenever you look at crypto, there's something going, parabolic, and you kind of look and think, oh, I just buy now. And I would just say never do that because you have no idea whether you're buying the beginning or the middle or the top or but so when you see like, sure, there's like these controversial connections to who might be behind things and why they might be doing it, or call driven flows with somebody saying, go buy this, it's really important. But I would just kind of come back to a much more fundamental trading expertise and edge that you should work on, in my opinion, which is like always know why you're buying and why you're buying right now. And if you're taking a position with leverage, what's your time frame? And don't pick that arbitrarily. Don't kind of think this thing's going up over the weekend. Because I think anything where you generically set conditions around these things, you're just waiting to get eaten up by someone who has been doing this a lot longer than you. So kind of almost like admit your deficiencies in the game that is trading. And there's some very good traders in this space. And instead, I think rather than, I think observe these things and use them as education on almost like business, and which models make sense and which grow. But if you're looking at this and thinking, to your point, Sean, about, oh, damn it, I missed out on Hyperliquid. FOMO is the killer, right? That people look at this and say, I'm going to buy now because I've obviously missed it. And now I'm going to miss out on everything. And if enough people do that, even the guys that got it a little bit wrong get it right because there's always someone later than you. So, yeah, again, I think as we develop this series and we talk to you more about kind of trading and options and different ways that you can get exposure to ideas, one of the key things is have an edge and be able to articulate it and be able to define it. Why are you taking this trade? And this is, to me, and again, I don't think this is super controversial, but it's certainly quite a strong opinion. This is not far from gambling to me. And take, this is shitcoin mania all over again. So if I don't see an edge and I don't see a business model differentiation here, then to me it's kind of, oh, Hyperliquid work, let's do the same thing. Let's get behind it as quickly as we can. And if you've got the right voices and the right capital behind you, sure, you can make that work. But for independent investors and for newer investors, I would say it may be better to trade on a paper account or just watch this happen, learn from it, see what you would have done, and see whether you would have profited or lost your money, and then play next time if you must.
It was like a really like I agree with a lot of that. There was a really interesting tweet by Kane earlier this year about how he put on the trade for the Trump token, and I believe he made like a pretty sizable win off of that trade. Um, and I think the key point that he described was like he got in early. Because he saw the tweet, he checked the contracts, he you know did his DD basically in the space of I'm guessing probably 15 to 20 minutes. Realized that this was like a genuine like Trump coin, genuine, and assessed, and this is the edge, right? Like he assessed that, yeah, like I think, well, Lighter in particular is the one that I've had the most experience with, and its sort of unique gimmick has been the we don't have trading fees, which for someone who's flicking in and out of positions is like a particularly appealing setup, right? Like paying, a couple of bucks here and there doesn't sound too bad on like a several $1,000 position or higher. But then, like when you do that a couple of times, especially on low liquid coins, like if you're trading, I don't know, Pith or something like that, um, it really starts to add up. And I think that's its main claim to fame so far. I think sort of you can edit this out, but like I'm sort of this can sort of morph into the real thing now. But the thing that people have been really talking about is like, what is the price of these points, these lighter points. And people have been stacking these things for months now. I think it started in April. Um, but really, like what's been interesting about it is like people are pricing these points like astronomically high at like $30 to $50 a point. Um, and given that people are farming like thousands of these points, especially if they got in early, like this is sizing up to be like a Hyperliquid number two airdrop. And I think that's been quite interesting, right? Like people, like, to your point
Whose
earlier,
money
like
is it, Sean? Is it VC money behind it, or Hyperliquid? Again, I'm thinking of like the other cornerstone was they didn't accept outside capital as they grew it, and that was seen as a huge plus point, I guess. Who's going to be paying out on these points, right? Like if you don't know where they're coming from, then they're farming you somehow.
I'm sure to an extent they are farming you, right? Like that is sort of the point. No pun intended. I think what really the value comes from is like everyone has this huge expectation now after like what happened with Hyperliquid. People made, if you traded, a couple $100 worth of fees on Hyperliquid, you probably made at least a high six-figure airdrop. And if you had the balls to hold that to, its peak at like $58, $59 earlier this weekend, like you'd probably be sitting on like a comfortable seven-figure payout, which is insane. Um, and I think that's really whetted the appetite for a lot of these perps traders and people who like miss the hyperliquid boat. Like I'll freely admit I missed that. And I am very, very much kicking myself every day that I didn't, you know, put a few trades on hyperliquid at the very start. And I don't know, maybe this is people, to your point earlier, thinking the line always goes up and thinks that the next one lighter will, you know, um, get you like a good payout, as did Hyperliquid, people rotating from Hyperliquid into the next big thing. I think it's like Hyperliquid is like technically it's great, right? Like I'm not an engineer, so I could be speaking out of my depth here, but the thing they really nail well is like the liquidity. Speaking as someone who's traded options on a less liquid book, right? Like it's not fun. When you open a trade and you're immediately down because the book is super wide, it's a terrible experience. And the really nice thing about Hyperliquid is like the spreads are super thin, the book is super deep. So if you want to enter a position and you want to enter it in size, like you will get that fill, and that feels like really, really nice. In addition to the like the low fees, but there's nothing unique to that, right? Like liquidity begets liquidity, and if people think a new venue is going to be more liquid, the liquidity will flow there. So I think that this is people sort of one rotating from hyperliquid into the next big thing, and two, like maybe we're seeing a diversification in terms of like one monolithic perp DEX, previously Hyperliquid, into several competitors. So I think Lighter is probably like the case example of that. But we can talk as well about Asta, which is probably the thing a lot of people have made considerable amounts of money on over the weekend. So let me pull up its price chart here. Well, this is the President of the United States launching a crypto token. This is probably going to go parabolic. Obviously, there is no intrinsic value to this Trump coin unless obviously you wanted to be invited to a dinner down the line, but I don't think that information was out at that point. Um, I think the interesting case, the interesting point here is that like if you saw this tweet, and I think I saw oh, sorry, not this tweet, the Binance tweet, CZ's tweet. If you saw this, the edge would be identifying that like this is some kind of signal, right? And the signal would be that like, okay, CZ is obviously a big deal. Hyperliquid is obviously a big deal. This is probably a way of meshing those two worlds. And next day, you see this new token launch. If you put those two things together, I think that is enough to justify an edge, right? Like you can probably put those things together and say, okay, I think a lot of other people will believe that this token will go up because it's Binance, because it's CZ, because it's a hyperliquid competitor. And I think that realization is what Kane was talking about with his Trump coin, analogous in some ways. And so I think you could sort of eke out an edge there if you were able to figure this out, or one, see this tweet, to figure out that you know, also realized when Asta launched on the 19th, and then put those two things together. I think that could sort of justify you an edge there. But yeah, I think if you
It's a fair point. It's a fair point, but I do want to have this one out. It's a good debate. Um, I think if you consider it a signal, then you're kind of starting the stopwatch for me when it hits the public domain. So if that tweet's your signal, then I would love an analysis of all of these different interested parties. How fast and how accurately do they respond to that signal? How many people are going to respond to that signal more effectively in synthesizing that information than you? So, and hey, the factors you're saying are compelling, like, and it all makes perfect logical sense. But how different is that to Kanye West's a big, the biggest artist in the world and has this enormous following. And, he's out there saying this is a real coin and now it's legitimate. And, you could get into the same thing, right? Like I remember back in the day, I was trading on Avalanche and Dwight Howard popped up. And for those that don't know, Howard's a super successful basketball player. And it turned out, long story short, to be one of these, I can't remember the name of the guy, but the Dubai-based scammer that went through a bunch of kind of celebrity coins and just represented the individuals or talked them into it loosely enough to get some kind of agreement and then ran with it. I'm not saying any of this is a scam. I'm not saying any of this is in any way kind of dodgy, but I'm just saying that this is what I mean by the shitcoin model, right? They're pump and dumps at the end of the day. And this may not be, right? This may go on to be bigger than Hyperliquid. But I just think there are those out there with more information or a faster ability to synthesize the signal and respond better. And that includes Kane Warwick and probably even you, Sean, versus much of the market. So I think just kind of I don't want to be I don't want to be like the harbinger of doom against all of the interesting hype over the weekend. I love this kind of market, but I'm just saying, be careful about how exposed you get. Maybe this is one for that 1% of your total amount that you have in your wallet that is for degen and crazy plays.
absolutely look, I was looking to buy, but even then I would have put like a tiny amount of the stack. And I don't think because I only saw I think Asta when it was like maybe 80 cents, 60 cents. Obviously it kept going up. And when that's happening, you're just like, surely this is the top, surely this is the top. And that process is um a lot of FOMO, I would say. So, I broadly agree with you, right? Like I think unless you get in super early, unless you get in there on like the 19th, just as it launches, I think that um you're gambling at that point. Your edge greatly diminishes the longer that that token's been live. Um, and yeah, I mean, that's all the reason why it's more important to get in early, and to keep an eye out for these things. And like the more and more I scour it, the more it seems Twitter is just this gold mine of information if you are willing to keep a lookout for it. Unfortunately, like 99% of the time it's all junk, but like in between all the mess are these gems. But it's very hard to like when you see the gem not discount it with the rest of the 99%. So as they say, you have to believe in something, but yeah, it's a bit easier said than done, unfortunately. So yeah. Um cool. I think the last one just wanted to talk about is like there is a what are we at now? A fourth runner in this race. I think there was where do I have it? Um we had Avantis, which is another one of these perp dexes. So this had a similar similar trajectory. Launched September 11th, but as you can see, sort of an up only trajectory there. So Avantis, I haven't done as much digging on this one, but it is basically a perp dex on base chain. Um, Not to use the line again, but it is sort of the hyperliquid of base. Um, it also has, I think, Forex and RWAs, but I'm going to guess that those probably aren't as big of a market as the perp dexes. Um, this one I did have a little bit of fun trading, but you know, only minor profits there. I think I think you're just sort of seeing more and more of these competitors sprout up, and this goes back to the original point of like, what really is the thesis here? The thesis is like become the hyperliquid of X chain, become the hyperliquid of some subdomain, and compete on that front. So I wouldn't be surprised if we see a couple more of these in the coming weeks, especially if if the lighter airdrop does well, or if these markets recover and like we are right and that this is not the top, but just a local top. Um, I think you're going to see a lot of people starting farming dexes like that. That might come back to being the norm. Obviously, it never stopped, but I think that if the lighter airdrop does well, and like I don't know when that's going to launch, but I think the hype I'm seeing on Twitter is just up and up only. People are pricing these at $30 a point, which is insane. People are saying $100 or several $100 a point, which is beyond insane. If that all goes well, I think we could be in for like Perp Dex Mania, and like people are equating this to like the L2 wars or the Alt L1 wars of, several years ago. I don't think that analogy is incorrect. I think that we could see something like that in the coming weeks. But yeah, that's my take on it at least.
Just my last piece of this, and I'm starting to sound like a broken record, but I just want to understand whose cash it is, right? Is if we look back to the L2 airdrops or any of the big airdrops that came before, it was VC cash, and it was a very different crypto environment, and they were buying users, and they were buying attention, and that was very much the meta for that period. But certainly in the last 12, 18 months, that's not something I've experienced at all. And even if you go to a new chain and you're a protocol looking for a grant, those are drying up, right? Those are things where people are looking for a lot more evidence and a lot more. So I think I just would, again, it's not really kind of stealing Hyperliquid's market share by copying Hyperliquid's model, because theirs was, they didn't take any, Jeff didn't take any VC money, and it grew organically, which was absolutely amazing. The fantastic marketing strategy around that. I don't know enough about these guys to say whether they are copying that religiously or whether this is a slightly different play funded by, someone with a lot of money that could pay out the points quickly. And maybe it doesn't matter, if it is the return of easy VC cash for using the right platform, then great. But look at the two parts of Hyperliquid. You've got the liquid piece, the second part, which is the liquid piece, and we've talked about, if you fragment the liquidity across all of these chains, and this is the perp dex of base, then you're already kind of, it doesn't make sense on versus the overarching centralized liquidity will be everywhere and abundant. That doesn't really make a ton of sense. And the other part of the name is hype. And if the hype is real, then great, and if it's falsified and it's literally like a shitcoin pump and dump piece, then that will be outed too. So I would say, just, I wouldn't touch this with a 40-foot barge pole personally, because I don't have enough information to feel like I've got any kind of edge here. But I watch from the sidelines, and I do think the good will out, and we'll see kind of the cream rise to the top, and if there is a real competitor in there, and how they evolved, and how they built on the path that Hyperliquid showed everyone. But for now, I'm seeing a bunch of people saying, "Me too." Well, we could do this too, and it's too soon for me to see anything genuine.
Well, with that, I think we can call it there. I think this was a great first episode. I'm very happy. And yeah, in the coming weeks, we'll have some guests on to pick their brains on other issues. And yeah, in the comments, or shoot us a message, let us know what other topics you'd like us to cover in future episodes. Cool. Ian, do you have any final words?
Yeah, really want to echo that last piece you just said. I think that we have lots of ideas of things we'd like to talk about and share, and we've got tons of knowledge and options. So for those that are interested, do ask questions around that, because we can really give you some interesting, I'd definitely give you some edge in that space, because it's something we spend a lot of time doing. But I think a podcast is only as good as the feedback it gets. So really, really interested to hear what anyone wants to see, what they enjoyed, what was boring, what they agreed with, what they didn't. And I think we're really, really open to that. So we're not going to ignore comments. If we see things, we'll take it on board, we'll discuss it, and we'll shape this to be interesting for those that are taking the time to watch it. So thanks for listening or watching, and yeah, look forward to seeing you in future episodes.
Cool. Thank you. See you guys next time.